Hey everybody, it's Brian here. Today's Monday, the 2nd of October, and let's take a quick look at these markets at the close. S&P still has that declining 5-day moving average. That will change tomorrow as we get rid of this data right here. So we're in as good a position as we've been in a while for this market to potentially turn back up. We are stuck below the anchored VWAP from last week's high and last week's low. That's the green one. NASDAQ looking a little bit better. We are above last week's anchors from the high and low, but they really didn't provide much value here today. It's that anchor from this peak over here that's been kind of in the way. We did have a lower high today. So, what we're looking for is a higher high above a flat to rising 5-day moving average. We did not get that. If we had made a higher high, let's say on this rally right here, there's no way I would have thought that would lead to continuation, because the market had just rallied from 357.5 to 363. So a 5.5% move. Instead, I would have liked to have seen it do this. Or perhaps tomorrow, maybe it runs up through that in the morning, pulls back a little bit, and then gets going. I wouldn't automatically trust it just because it makes a higher high. It's about the quality of that higher high, how it gets there. In other words, did it expend too much energy, and where can we place our stop if we're wrong? Let's drag this screen down a little bit and look at the daily time frame just to get a better framing of where we are in the overall picture. The S&P, we're still finding buyers at that March anchor low, and that's been an important level. We thought it would be, and it has been here for a full week now. This is the anchor off of that recent high, and this is the declining 50-day moving average, which puts a shadow over any rally attempt here. So while it might be bullish that we get some upward activity, I'm not sure this market will be able to sustain it. And when we look at the semiconductors over here on the right, we're right up against the anchor from that previous high. We're right at this neckline on the daily time frame. We've still got a declining 50-day moving average. If the semiconductors fail in this area in the next day or two and lead to another leg lower, I would certainly expect the rest of the market to follow through to the downside as well. So we're not out of the woods yet. We've got a lot of cross currents, and that to me means continue to go slow, smaller share size, tighter stops, take partials as you get quick moves.